Here we go with Crowdstrike Earnings. I know they're definitely earnings that everyone was excited about here. We talk about really the Rona stocks is what I like to call them. Stock that really seek to benefit from the current pandemic, and Crowdstrike naturally one of them. As a big cybersecurity company, they seek to benefit just due to a lot of stay-at-home, work-from-home businesses. So people have to have that cybersecurity, and CrowdStrike can provide it. We're talking about a stock that is actually up nearly double. It's nearly doubled its share price year to date, which is pretty incredible thinking about that, and then the rest of the market relatively stagnant. Which, again, the market's pretty weird being stagnant too, but regardless, this stock is up nearly 6% after hours, so we're going to take a look at exactly what's going on. So, as far as their earnings are concerned, a non-GAAP EPS of 2 cents, beat by 8 cents, and a GAAP EPS of negative 9 cents, beat by 6 cents. I'm pretty excited with that. I predicted overall, I thought they would just completely be in line as far as their EPS was concerned. I expected an inline, so this is a good beat in my perspective. I'm pretty excited about that. Again, I don't like negative earners, and you know that, but it's not that much. Negative 9 cents per share is not nearly as bad as some companies out there. So at least my perspective is they show progress. That's kind of what I focus on with companies like this. Revenue of $178.1 million, up 85% year over year, beat by $12.71 million. It's a nice beat, and a very good year over year growth. Very good year over year growth. So average recurring revenue, or annual recurring revenue, I should say, increased 88% year over year and grew to $686 million annually, of which $85.7 million was net new recurring revenue added this quarter for some new subscriptions. Pretty exciting. A brief overview here as we look at it. Then we'll look at their earnings release, I should say. Don't know where these hiccups are coming from. They've got no right to exist, but they're quiet ones, so we'll survive out here, I promise you. So, CrowdStrike up after hours, including raised guidance. Gotta love that. Revenues jumped 85%. The core subscription revenues rose 89%. Gotta love that. Operating income swung to a gain of $1.2 million versus a year ago loss of $21.9 million. Non-GAAP net income swung to a gain of $4.5 million from a year ago loss of $22.1 million. So very good growth, and that's what I talk about with these companies that are negative earners. You want to see that positive growth. You want to see them get towards a spot where they will become profitable, and CrowdStrike showing us that they can do that. It added 830 net new subscription customers, which is 105% year-over-year growth, to land at a total of 6,261 by the quarter's end. Subscription customers that have adopted 4 or more cloud modules rose 55%. That's right. And obviously when we see that, that's increased average recurring revenue or annual recurring revenue. It's also, we just talk about overall just more revenue in general for them as they're using more of their platforms. Those subscribed to 5 or more modules rose at 35%. You like to see those numbers for CrowdStrike. So they're not just really selling to just the individual. They're also selling to businesses, and that's really the companies that would be using this, their platform, 5 modules. So cash equivalents we'll look at says it's $1 billion. For quarter 2 guidance, it's guiding $185.8 million to $190.3 million. Operating profit of negative $3.1 million to break even, and a net loss of $3.8 to $0.7 million. So they're expecting a loss as far as the EPS is concerned for the next quarter, but a little bit better improvement even quarter over quarter. For the full year, they're expecting revenue of $761 million to $772 million, operating loss of $19.2 to $11.1, and a net loss of $18.1 to $9.9. So, not bad. We're talking full year. They're expecting less net loss than they saw in the in one quarter of last year. So Q1 last year They lost more than they're expecting for a full year now, according to their estimates. So that's pretty cool. So let's take a look at their press release and what they would like to tell me. So straight from the CEO, Crowdstrike finished the quarter with strong momentum and delivered results that exceeded our expectations across the board. An increasing number of organizations recognize the power of Crowdstrike's cloud-native Falcon platform to effectively stop any sort of data breaches, as well as simplify their security and IT operations stack with a single, lightweight agent. That's right. Cybersecurity is nothing to joke about. We talk about the future here. And with everyone pitching VPNs, with everyone talking about the thing is, cybersecurity is massive because of the fact that these hackers are getting more and more advanced, right? These are people that are very good at what they do. A lot of them are very knowledgeable at what they're doing, so they know how to get into systems. So you need advanced systems, and frankly, I do like CrowdStrike's platform because they have quite an advanced cybersecurity platform. And it's very good for a lot of business to hold confidential information, financial records, everything like that. It's absolutely understandable that companies would go with CrowdStrike, and they'll need it more than ever as businesses really progress into the next generation here, as I should say. The next generation of business being the digital age. And a lot of companies are really finally transferring over into that. And CrowdStrike seeks to benefit quite a bit. We kind of got pushed forward quicker than expected with this whole Rona thing, but CrowdStrike should seek to benefit because they should pick up extra subscribers in this. Yeah. So for the first quarter results, you do love to see that 88% increase in recurring revenue. You gotta love seeing that. It's quite nice. Net loss was $19.2 million this quarter. So they're expecting better quarters to come. $19.2 million loss compares to $26 million in the first quarter of fiscal year 2020. So there is improvement year over year. Not massive, but there is improvement. GAAP net loss was 9 cents versus 55 cents in the first quarter. So more shares out there, so that actually that helped that GAAP net loss number quite a bit. Anything else in this slide? Nothing super fantastic. I don't know why I sound like that or what happened to me there. Net cash generated, so cash flow, was $87 million this quarter. Got to love that, compared to a negative $16.1 million in the first quarter. So a positive cash flow is good. You got to love seeing that. As far as recent highlights, we saw this about the 4 or more. CrowdStrike's Falcon endpoint protection platform was named the leader in Forrester Wave Enterprise Detection and Response Q1 2020. CrowdStrike received the highest possible score in 11 criteria. Woo-hoo! It's a well-run platform. Very smart people running this company, right? For the second consecutive year, CrowdStrike earned the highest overall rating among vendors named in the 2020 Gartner Peer Insights Consumer Choice for Endpoint Detection and Response, with an overall rating of 4.9 out of 5 with 106 verified customer reviews. That is right. So they announced partnerships with the Computer Center, a technology partner trusted by large corporate and public sector organizations. Pretty nice. And Veronym, a cloud managed security service provider that specializes in small and medium-sized enterprises. Oh, baby. Definitely important, too, when you talk about this platform. The expansion into small businesses as opposed to having most of their really recurring revenue come from bigger companies. Is that these small and medium-sized businesses really are going to start taking over the online business more than they previously were. It's how they stay relevant in all this. And CrowdStrike is a very good way to keep those companies safe when they make this transition. So really it depends on how they pitch themselves, but they have a good opportunity ahead of themselves. So very nice thing ahead of themselves. I'm telling you, this is what happens. I haven't had this. Tomorrow's my first off day. In the last, shoot, at this point it's 16 days. So I am tired. But we always chug on for this stuff. We chug on for the stocks, baby. Let's look at this earnings. Oh my gosh. Let's look at this balance sheet. And they're only giving me a quarter-over-quarter comparison, which, I prefer year-over-year personally. But you see big changes here. And we'll see what that looks like. But overall, cash equivalents of $1 billion versus $264 million as of a year ago. Wow. That's pretty crazy. How does that happen? Well, I definitely want to find out because that's quite a big difference. Total current assets of 1.2 versus 1.1 billion a quarter ago. And you know what the difference is? Those marketable securities, that's right, they cashed them in. So those marketable securities went straight into their cash pile, and that's where that money came from. Total assets in general of 1.5 billion versus 1.4 a quarter ago, so it is still good improvement. From a liability perspective, they have a total current liability number of 555 million versus 493 million of a quarter ago. Not all things considered, there's nothing massive to talk about as far as that's concerned. It's a number that obviously rose, and you see more expenses for companies, so you expect that number to rise. So it's nothing weird there. Total liabilities of 766 million versus 662 million. A lot of that due to an increase in operating lease liabilities. Deferred revenue obviously is a part of it as well. So nothing crazy, but overall stockholder equity of 753 million. Overall good balance sheet. We talk about nearly twice as much, or really is twice as much assets as liabilities. Now, the thing is, with a balance sheet already looking decent with a company that's not necessarily making money, they're close to it. But from a really a net earnings perspective, they're not. All things considered, this company's in the right path, right? It's on the right path. And really, with a balance sheet like this, it could take off because it has the cash to fund itself. It could take off if they start really flooding this balance sheet with a bunch more cash, and they become a profit beast like a company like Facebook, if you think about that. There's a lot of potential for this company, no doubt, and it's actually just really barely over the highs as of, not even actually near the highs that were, I believe, went over 100, 101 just a year ago. So it's still not quite at the valuation it was at one point. Still a relatively new IPO if you think about it, from June of 2019, and it's kind of hovered around there. It went down for a while, definitely faced a little bit of the Rona impact, and since that, up 133%. So I don't know, valuation wise, we talk about a $19.8 billion market cap on a company that's annually making $790 million. I think the valuation is very steep on this, and I think it got carried very high because, first off, the potential's there, obviously, but then we talk about just these tech stocks that really benefited from, they've outperformed the market by massive degrees because of the Rona. And Crowdstrike, I think, has been a little bit overbought in my perspective. Hear me out. So I don't think I'm necessarily ready to purchase a company like this. I don't think it's necessarily going down, but I do believe at some point there's a chance that investors sell out of this. Maybe. We'll see.